leveraging cost with growth initiatives, and talking about CFO's role in cost optimization. So before that, I'll just introduce myself. As Diksha said, I'm part of NSDL Group. NSDL is National Security Depository Limited. There are two DPs in the country. One is NSDL, one is CDSL. There are two subsidiaries within NSDL. One of the subsidiaries, NSDL Payments Bank. The other subsidiary is NSDL Data Management Limited. I'm part of NSDL Payments Bank. We were granted license by the regulator, Reserve Bank of India, in 2016. And that's where we started our journey as a bank. It's going to be 5 years since the time we started our operations. So it's a very relatively younger bank. And as our major role as far as payment industry is concerned, we are an enablers with regards to providing technology to the last mile customers. A lot of people are not aware of Payments Bank, because in my circle also, when I tell to my friends what is Payments Bank, people are saying that, "Tum log karte kya ho?" And these are the questions that comes to me. It's very difficult to understand and comprehend the model. But essentially what we do is that we provide technology enablers or technology infra. Some of these are common names which you would have known is UPI and so on and so forth. So we ensure that we provide this service to the last mile consumer. So that's something about me and myself and brief about our company. I will hand it over to Sandeep, sir.
Sandeep. Sir makes me older than what I am. But good afternoon, everybody. Pleasure to be here and to share my experiences, which is exactly what I will do. I am not a theoretician or an academician. So I work for Pidilite Industries. I'm sure you would have used some product or the other of Pidilite. So I won't dwell too much on the company. Quickly, maybe give few thoughts on the topic. The topic, as I see, reads leveraging cost with growth initiatives. Actually, what we practice in Pidilite is leveraging growth with cost initiatives. So just change. So the mantra of the company is growth, and I'm sure that would be the mantra for every company. So I would invite you to consider the topic as how can you leverage growth with cost initiatives, because growth requires investments. Investments, there is no third party who will give you. You have to self-generate the fuel for the growth. And that's how I read the topic. So without much further ado, the way we have structured this discussion for the next half an hour or so is we've all jotted down a few questions, and I will pose one to him, and then Jigar will have maybe a question or two to ask me. And then obviously we'll keep some time at the end for any questions from the audience. So Jigar, if I could pose the first question to you, which is that how can CFOs achieve a balance between operating margins and growth through a cost productivity strategy?
Sandeep, as you rightly said, the cost essentially has become a very core focus for all of us. And all of the finance stalwarts, the finance head, the CFOs who are here will agree to me that, the jargons in the last 5 years that we have come across is how to optimize cost, how to leverage processes, how to transform the finance function, how to transform the entire company. And, this has become a very critical point in last 5 years. And this is one of our major discussions that happen nowadays with the MDs, the business guys and everyone, and takes a lot of our bandwidth. One of the critical thing that is important to balance out cost, and especially for somebody like me who comes from a payments bank, where the margins are very wafer thin, because we work on commissions and we pay out a lot of commissions. And that is from the fact that we have a very tough regulations with regards to our business model, and also the competition is very tough. So what we essentially do is we look at product profitability productivity, and tear down the cost at a variable level, at a fixed level. And we try to break down this into various components, to ensure that, we don't go short at a contribution level, at a margin level, because after the contribution of the margin level, that's where the fixed costs come in. And that is one of the important roles that we do nowadays, and especially this is more important because the technology has come in very fast since last 10 years. The kind of discussion I used to have probably 10 years ago and now what I have right now as of 2023 is very different. So bringing down and balancing the margins, what we do as far as our industry is concerned, we use technology as one of our comfort factor or the leveraging factor in order to bring down our cost. And then we try to balance the margin ratios in order to report this profitability to the larger consumer. Just one data point, for us is that overall in our industry, the amount of employees that work in payment sector or the payment industry is about 8,000 people. We are running this company with 125 people. And within these 125 people, we are every month throwing a gross throughput of 11,000 crores. So that's where, sir, as you said, when we look, we try to balance out everything with technology enablers, and also we tear down the cost with context to product profitability and product optimization. So that's how we try to balance our part. So moving on to the other question, Sandeep, I would like to ask you, because you have 30 years plus experience in this field. And nowadays, we also come across this terminology of financial modeling. So what are your thoughts? Like, how do financial modeling and analysis help in analyzing potential investments and pricing strategies, at the same time, maintaining financial or operating discipline?
Sure. So thanks for the question. It's a very thought-provoking question. But before I answer that, I just want to dwell on a point that you made while answering, that beyond the point, fixed costs kick in. And this was, one of the favorite things when you freshly pass out, you are told that costs are either fixed or variable. And I was taken to task by my bosses in the earlier days. He says there is no cost called fixed. Every cost is variable. It is just the time frame within which that cost can vary. So that thought has stayed. This my boss would have told me some 30 years back, that there is no cost which is fixed. Everything is variable. It's just the time over which that cost can vary. But to come back to answer your question, I think financial modeling has been something that all finance people have used extensively, thanks to Excel. Everybody does. When a capital decision comes, the first thing a finance guy does is opens his laptop and he creates payback, IRR. We're all masters of doing all that. Today, that technology has become, what technology has enabled, and I will answer that in two parts. One, I think thanks to technology, you have much greater data that is available to you. So while the basic techniques don't change, you do your IRR and NPV and payback, but I think the way you validate the data that goes into that model is now far richer. You have data which is internal, which is external. And I'll give one illustration. We were evaluating a case for one of our new products that we were going to bring. And that product is a grout which you put between tiles. It's a very new product. Most of us are used. You may not have seen a grout in your house or in the washroom. So we were trying to simulate the demand for it. Now earlier we would have taken internal assessment and put some thumb rule. But today, if the correlation is with the tiling industry, you have umpteen data points of which forecast how the tiling industry will grow. So that kind of helps validate the assumptions. And I think similarly, trying to model, and I'll give an example because one of the points was about how does it help you price your product. And this is an illustration or an example using our main product, which is Fevicol. So Fevicol comes in multiple sizes, 60 kg, 50 kg, 25 kg, 5 kg, 1 kg pails, right? Now the biggest selling product is 50 kg, because if you are doing a big house, 50 kg Fevicol you will need for making furniture. Now we were trying to do some pricing because input costs had gone up. And we did a simulation thanks to data and thanks to technology that was available, which demonstrated that a 60 kg pack, which is your main selling pack, maybe is price sensitive. So whatever price you increase, demand is elastic to price. But in smaller packs, there is relative inelasticity. And the simple reason being that a guy who has bought 60 kg Fevicol, he may validate the price at the time when he is bought that 60 kg. But supposing he's run out of 60 kg, he won't buy another 60 kg. He may buy 1 kg, 5 kg. There you have much greater pricing power. So using that insight, we were able to differentially price the smaller packs, which you will find in most industries at a rupees per liter or rupees per kg will be higher than the bulk pack that they have. So I thought I'll just share these two examples.
It's a brilliant analogy and a good example to know for all of us to understand how to tear down the pricing and how to break it down into several components and make it more effective at the same time. So thanks for the insight on that.
So now it's my turn. So Jigar, can you explain what are the benefits of budgeting with actuals rather than any benchmark or last year?
I think everybody would agree every day that what we do as part of our core function is actuals and budget. We sit with our MD and we tell him what is the run rate of our revenue. That is one of our major discussion items or major KRAs every day that we do with our MD. So I think we break down this into two rules. One is, benchmarking and then the budgeting. Benchmarking is also equally important because that time, as far as benchmark is concerned, we look at industry peers, the industry benchmarks, and we try to map our high level numbers or what we want to grow and what we want to achieve. But I think the most important element that comes at a micro level is how you actually on a day-to-day basis, map your budgets with actuals. What we do is that we do it on a fortnightly basis with our MD in order to ensure that the risk emanating out of our actuals, or if there are any shortcomings, that can be taken care of. So it's a great amount of benefits that comes in when you are actually mapping your actuals and budget on a regular basis. And this is a continuous process. It's not a process that you do it at the end of the month or a quarterly basis or a semi-annual basis, but it's a very regular exercise that everyone needs to do. And I'm sure because this has become a very important part, the budgeting, the benchmark, and mapping our budgets with actuals. Each one of us are going through the same problems. Every morning when I reach office, my boss asks me what is my monthly run rate of revenue and what is the monthly run rate of cost. So har din subah jao, same question. So every day this is the routine life cycle, and this is very important because as you rightly said, we are taking into a life cycle of a slightly elevated interest rate cycles. And I come from a bank, so interest rate cycles matter to us, and we track it on a regular basis, the interest rate cycle, because that impacts our treasury business. So it's important to do for us on a very, very regular basis. We do it on a fortnightly basis, but eventually we'll have to come down to probably on a daily basis to at least track where we are heading towards a budget.
Maybe one thought I had on budget, and this is again something that I have kind of picked up over the years, that budget is not a license to spend. Most people think that if I have a budget sanctioned, it's a license for me to spend as per budget. To me, budget is only a means of setting priorities or resource allocation, rather than it's a license for you to spend that
something
budget.
That just to when we sit down with our sales guys, once the budgets are issued, they always come back to us and say, budget diya hai na Jigar, तो हम खर्चा करेंगे. So that is something that there is a constant engagement you have to do, and you have to tell them that, as you rightly said, budget is just an enabler. Doesn't mean there is a budget so you have to spend. And this is some of the questions that we keep grappling with on a regular basis. But yeah, I'll move on to the next question. Since Pidilite comes from huge experience with 60 years plus, just wanted your thoughts. How do such a large company, which also has an advantage, can manage to effectively establish the process, and in turn of that effectively establishing the process, able to extract its impact on increasing top line and at the same time maintaining the margins, because you've been there since 60 years. And it will be important for us to know, how a company as large as Pidilite optimize their processes that can in turn, help in terms of growth, in terms of top line and in terms of operating margins.
So I think obviously the first question there is that does the company know what its inherent strength or advantage is? Do you know what your secret sauce is? Once you know that, you will go out to protect it. And I'll illustrate that with an example that in Pidilite, our motto as a company is to identify what we call unserved or underserved markets and serve them with brands, not products. So we identify areas which are kind of part of or adjacent to the core and identify these unserved, underserved markets and serve them with brands. And one of the USPs that we identified of doing this conversion was very close working with the user community. I mean, India is not a DIY or a do-it-yourself market. If you have to paint your home, you won't do it yourself. If you have to repair something in the kitchen or in the toilet, you won't do it yourself. You'll engage what we call have it or do it for me market. In which case the user becomes a very key enabler. User could be carpenter, he could be contractor, plumber, what have you. And we've identified that this is the real secret sauce of Pidilite as to the kind of bonds that you've been able to forge with this user community, because A, they are largely uneducated. Their trade they have learned from maybe their ancestors or their fathers, and therefore you have to kind of educate them in the new way of working. Now, having identified that, we have said this is one of our moats. So at no point of time will we allow this moat to get breached, whatever may happen, irrespective of what happens. And therefore the way the engagement has happened, and let's use an example of how we engage with carpenters. Earlier, when Fevicol was being introduced, the journey was about teaching them how to use Fevicol. Then maybe in the 70s or 80s, we invested in upgrading their capability to make them a bit like an interior designer. Equip them with designs which are contemporary so that they can go and upskill and upsell rather than just a carpenter. He's also a consultant. And of course that relationship has evolved over a period of time, and today it is at multiple levels, starting with economic rewards to capability building to relationship that cuts across all levels. So much so that when COVID happened, the first thing that struck the company was now there is no physical interaction. How do you reach out to this community of carpenters who's your core strength? So we would have educated them to use digital means to stay connected with the company. And we would have had, at least in the first year, nearly 200 plus interactions with the carpenter community, all using MS Teams. So it's just that first you identify what is your strength or your advantage and ensure that that is always over-resourced. Never cut that part, however tempting it may be, because in the short run you may not feel the impact, but in the long run certainly it will impair your competitive advantage.
Thank you. Quite insightful.
So let's come to something now which is very close to everybody's heart, which is the buzzword called digital, right? So, Jigar, in your thoughts, what are some ways to maximize value through digitization, and how can this become a vehicle or an engine for cost productivity strategy?
Thank you. I think this is a very important word, digitalization. In last few years, even in fact, Prime Minister Narendra Modi also been talking about digitalization in multiple ways, in forms and fashion. So everybody has now acclimatized in our country with regards to digitalization. What we had heard in the past, they used to say that, oil is the next big thing, and then data has become oil. I would say data is now like a currency for us. So over the past few years, the way everything is changed, the landscape of the payment sector, the sector that I come from, has taken to the next level, because the cost of operating these businesses, earlier, I give a simple example. We do something called penny drop. The penny drop, I believe everyone would have, carved out a beneficiary, and you get a 1 rupee message from the bank that, you've added a beneficiary. So back in old days, when there was no digitalization or no technology advancement, we used to have those check mandates, ECS mandates. And now that has evolved to the next level where, the companies like the lending companies or the mutual funds, even the companies like CAMS, they come to solution providers like us, because we are a tech solution provider. And they give us a data, they give us information about the people who have taken the loans, the borrowers, or the SIP. The large amount of data, we send the signals to the bank, and we get their information instantly in a fraction of a second. And that's how when that 1 rupee goes into your account, the bank is actually getting a lot of information from your bank account, the name, the account number, so and so details. So this is how the information is now being fetched, which was very different probably, let's say, 10 years back. And that is something that we do as a technology bank also, and a lot of bankers do nowadays. So what you said, digitalization is one of our core, strength, not just for us, for any company. And we nowadays also explore ways and means to use AIs in order to make our processes more efficient. Some of the processes which are regular, daily, mundane, or regular occurrence, we try to explore ways and means with the technology team. So while I have been a chartered accountant since like 16, 17 years, but the last 2 years I've been spending more of my time with understanding tech guys, how to sort of, and this is something like unlearning and learning, because this is where we've come in last 2 years, where we come from finance, but how to embed the technology into our own DNA is something which I think digitalization has done, and it will continue to do. And this will form a major part of our discussions going forward, whether it's a banking company or whether it's a non-banking company. So I think, Sandeep, digitalization is a very larger world, and this helps us a lot in bringing down a lot of our cost. And that's how the way we look at it, because we are 125, that's why I keep saying that, out of 8,000 employees, we are just 125 people running this company, and we try to aspire, and build the company block by block.
So just two things to add. One, I think the powers that be will be very unhappy at this penny drop word. We should make it paisa drop or rupee drop.
We have something
anglicized. I have shared that with our bankers, because we have told them that it's a foreign jargon in India. We should use
the financial, the jargon that we use as bankers is Benny validation.
Okay.
So it's like beneficiary validation. But as you rightly said, over the years, that has become penny drop.
Yeah.
And now there is a very common jargon informally used as a penny drop and penniless.
Correct. And second, on this digitalization, one of the advantages I will share, and about 15 odd years ago, one of the biggest problems that a finance guy would have, he'll go and tell the business team that, your sales growth is 8% and your margins have, or let's limit it to only sales growth. The sales guy will say your number is wrong. The first response that the counterparty will give is your number is wrong. My sales have grown 8%. And you will scratch your head, Arey, how is it that your is 8, mine is 6? We are all talking from the same ERP. One of the benefits that at least I have seen when you digitalize at least your information systems is what I refer to as OTFA, which is one truth for all. So at least there is no debate, argument happening as to what is the correct number. Otherwise, you will spend half an hour debating the number before trying to find a solution.
You talk about numbers, whether it's, in our industry, everybody double counts the number, because our number is about growth. So we go with number of customer or what is the top line or what is the headline number. So it's become repetitive what you rightly said, for something like if I have a 10%, somebody will add my customer and say mine is also 10%. But effectively the base is the same. But yeah, so coming to the next question and the last one on the cost optimization, just share your thoughts, Sandeep, on how do you maintain financial operating discipline while ensuring enough financial capacity to fund growth initiatives. I'm sure funding your growth initiatives would also be part of key strategy when you are having discussions. So how do you maintain that? Maintaining the optimization and the growth of the company.
So I think it starts, this whole journey starts at the time when you make your plan. In Pidilite, we are very averse to the word budget because budget assumes that there is some finality to what you aspire to achieve in that year, and kind of budget becomes a ceiling. So we refer to it like a plan. In the plan, it's all chalked out. And I think the mantra that and I'm sure it's not anything unique to Pidilite, is that your revenues must grow at whatever is your target, 1x GDP, 2x GDP, whatever internally you have targets. And we maintain that your gross margins must grow faster than your revenue, which basically means that you are at least trying to sell an improved and richer mix of products. Even if you don't have any pricing tailwinds, at least you are trying to sell an enriched mix. And that's the only way you will get gross margins or contribution margins to grow faster than revenue. And then through scale benefits, your EBITDA or whatever metric you use in your organization, PBT or EBIT or whatever, should grow faster than gross margin. And you can do empirical testing to figure out what is the extent of the leverage. But these, if your shape of your P&L is not correct, then you have to go back and rework, and you will get constrained for resources that you may want to invest behind. So first and foremost is the shape of your plan, or the shape of the P&L in your plan, that must be correct, and that sets the context. And as I said, for us, budgets are not, or plans are not cast in stone. They get reviewed every quarter, like it would happen in most companies, and you reset priorities. And I think one way which, at least I have seen over the last 10 to 15 years, is have a very, very, very tough productivity goal for the organization. Very, very tough productivity goal. Because in India, believe you me, you will have 4 to 5% of inflation come what may. And every time you can't go to the customer and say, please fund this inflation through a pricing action. So you will have to take, and good companies, in my experience, have delivered anywhere between 4 to 6% of productivity gains, and this is 4 to 6% of costs, or 3 to 5% of revenues. And that productivity gains that you get, part of them go to offset inflation, because you can't pass on all of it to the consumer. Part of it goes to fund your growth initiatives, and part of it may flow onto the bottom line. So keep in mind, get your organizations to focus on 3 to 5% of productivity initiatives, assuming that you realize 1% goes to fund inflation, 1% goes to fund initiatives, and 1% of that 3% goes to improve your profitability. Very simple mantra, very tough to implement, but you have to get into the DNA of the organization.
I think that is a fabulous takeaway. I think since we are coming to the end of the end part of the session, that we need to have those productivity enablers and split those enablers into inflation, and also at the same time to fund the growth and to have something for the bottom line. I think this is a very good takeaway for all of us who aspire and continue to push our organizations to take to the next level. That's where we come to the end of the session. If anyone has a question, if only something to know about our experiences or anything, please feel free to ask questions.
You can raise your hands for questions. I'll pass the mic around.
Question, and if anybody has any experience or observation to share.
Please share experience, yeah.
Experience or kind of, I think.
Yes, please.
I have heard Sandeep ji couple of times in past also. In the morning, we started with Jain Saab ki philosophy, which was very clear. There is so much of data, there is so much of MIS, and out of that, we need to kind of find out the actionable items. And same thing I think you have told so many times in past also. Now what has happened, so much of data and so many dashboard, believe me, in your organization Pidilite also, there will be at least 100 dashboards. Those kind of dashboards, and like we used to say, so many cooks would kind of spoil the soup. I don't know whether we are going on the right track or not. Out of this conference also, there may be 10 shops. Out of 10, 9 would be related to technology, IT, and all those things. And believe me, whatever small experience I have got, I mean, you do all the analysis, all those analytics, and then you go to Lala, and then Lala will tell you, hey, all these are nonsense things. You do this, what I'm telling you, and believe me, out of 100, at least 90% times, that guy would be the right, and our technology, our analysis, our Excel may be at the back foot. So are we going in the right direction?
No, I think we are going in the absolutely in the right direction. See, the key with these dashboards and with data is they are giving you, as you rightly said, data. And I think what Neeraj would have covered, and he and I would have discussed it many times, is from data, first you get information, first and foremost. And from information, you get actionable insights. So at the end of the day, what is our job? To take a decision. We have to take a decision. So in our company, we call it KKH. Itna to dikha diya, karna kya hai? So unless you are able to say KKH, because you are not going with a decision, you are going with data to your boss or to the Lala as you described. Lala is telling you karna kya hai. If you go to the Lala and say, sir, ye karna hai, then you may have a more meaningful debate. And I'll draw an analogy. आपने प्लेन की कॉकपिट देखी है? कितने डायल होते हैं कॉकपिट में, उसके सिर के ऊपर इतने सारे डायल होते हैं. And we are saying planes are fly by wire. Now, how is it flying by wire? Because the technology is superior or as equal to human intelligence, but yet those dials are there. Nobody has removed them.
Just one point on a lighter note, if I can say, we are talking about problem of plenty actually, and the problem of plenty is that means we are having first world problems. So हम लोग सही जगह पे जा रहे हैं, और दूसरा लाला को ऑप्शन मत दो.
Maybe just one last question in the interest of time. Answer. I can go ahead.
Good afternoon. My question is to Batra sir. You said you're there with them for 6 decades. So that means you have worked with the first generation entrepreneur, Mr. Bhagwati Bhai Parekh sahab, right? So may I know what sort of data analytics when you're giving to him, what he in 1963, I guess you must have joined them. So that's the day when he had started. So what sort of data you were giving and what sort of reply he is giving to you in those?
Brilliant generational question. Brilliant.
No, I was not even born in 1963.
Actually, that's the right.
I was not even born
Correction.
in 1963. I'm not that old. I was not. Company was born. I joined them only 15 years back. But I think kudos to the promoters. Earlier, when I joined Pidilite in 2009, it was all paper-based data, and it was largely displayed through PowerPoint. There was no dashboard. Some of the technology that we have invested in more at the front end is all the thought process of the current chairman, who's the son of the founding chairman. So Madhukar Bhai's idea, he's 77. And he's the guy who says, "Mujhko speedometer dikhao." We have a speedometer for a sales guy, which tells him, has he achieved his beat plan? Has he achieved the range selling that he's supposed to do? So he does not do any reviews unless you show him the speedometer. He may not be a tech savvy guy, but he knows how to use technology, which is what the hallmark of a real entrepreneur is. You need not be a master of all trades, but you know how to use that resource.
Thank you, sir.